Okay. Welcome to all our viewers. Welcome back to our regular NFO series, where we speak with the top management, fund managers of the AMCs to understand the new fund that is coming into the market. We understand what are its features, benefits, what are the insights, and why this fund is worth investing. And today we'll be discussing Mirae Asset Small Cap Fund. Uh, to tell our viewers, the NFO period will begin from January 10th, 2025, and it will be open until January 24, 2025. And to speak about the fund and its strategy, today we have with us Mr. Shrenik Daga, AVP Product Development at Mirae Asset Management. He has over 15 years of experience in the industry, working across multiple channels, multiple domains as well. At Mirae Asset Management, he is responsible for product development, product strategy, and product management across predominantly active equity and hybrid strategies. So good to have you here, Shrenik, and to discuss this NFO and understand more about it.
Thank you. Thank you, Vinay. Thanks for the kind introduction.
Yes. Okay. We will dive right into the questions of about this fund. So the first question is around the investment rationale. Is that what are the primary reasons for launching the Mirae Asset Small Cap Fund at this point of time in the market cycle?
Sure. So, as we have seen in the past for over last 20 years, the kind of wealth generated within the small cap space that is significant. So recently, Nifty Small Cap 250 Index completed 20 years since inception. And it's heartening to see the kind of growth it is. So the CAGR has been almost around 17% over the last 20-year period. So that speaks a lot about why this proposition makes a lot of sense for the investors to participate in. Allocation could be a question of the investor's risk profile, but obviously this should form part of one's core asset allocation. So that was the starting point for us to launch a small cap fund. Now, about the timing today, I'll just give you a recap of how the segment has grown in the last 5 years. If you'll see, there's been significant growth in the market cap, particularly for the small cap over the last 5 years. So if you'll see in the slide clearly, in 2019, the smallest small cap, which is defined as 500th company as per MFI definition. So that was somewhere around 2,300 crores, which has grown to now almost 10,000 crores. Similarly, if you look at 251st smallest company, which is the first small cap company, that the market cap was around 9,000 crores, and now it is almost around 28,000 crores, 33,000 crores rather. So that speaks a lot about the kind of significant change in the market cap which has happened within the small cap space. Also, if you look at the CAGR in that context, small cap has seen a significant growth, and there's been almost 28% kind of market cap growth within that segment. So that has also been a feature for this. Plus, a lot of new listings. So 2024 has been a year of IPOs, and you've seen a lot of new listings happening. Now, particularly talking about small cap, we have seen almost 80 odd companies getting into the IPO space. And here I'm only talking about small cap companies, not SME segment. So even your coverage, the universe has increased significantly. The free float for the promoters has also increased significantly. For the investors has increased significantly. And even on the sell side, the brokerages who are covering this space, that has also changed significantly, as you can clearly see in the slide. And also the reason why we did not launch this product in the past, and now why we are coming now. So one more reason for that is the kind of money we have been managing within the small cap space. So you can clearly see in 2019, it was 24% of our overall equity at that point in time, which has now increased to almost 43% in 2024. Even in terms of size, if you look at the kind of growth that has been significant for us. So all this points to alludes made a lot of sense for us to launch a small cap fund.
Okay, that's a very interesting insight actually. And then comes the next question. Actually, it leans on to the next question is that now that you are comfortable and quite confident about the small cap cycle and the small cap handling asset allocation, the next question comes in is about the selection criteria. Is that how does the fund then identify small cap companies with strong growth potential while mitigating the associated risk? Because whenever we say small cap is one of the highest risk equity products, right? So then how do you as a fund aim to balance these things out?
Yeah, so herein we have our portfolio construction and investment philosophy approach has been very prudent, managing both return as well as risk. We are fairly cognizant about the underlying risk also that comes with this segment. So first and the foremost important criteria for us is to look at how has been the earnings for the companies which are operating in this segment. So at least for last 5-10 years, on an average, the ROE for the company has been around 15% and more. So that would lead for that company to qualify as part of our selection criteria. Second is how efficiently they are allocating capital within the business. So that is again a very important criteria. Beyond that, if you look at their primary two factors which have in the past usually led to why a company not doing well, or whenever investors are invested into those companies and they have seen permanent loss of capital in their investments. So there are primarily two reasons for that. First is if they are having enough significant leverage, that means they have taken too much of debt on their books. Now, here, when I'm talking about leverage, it is X of financials, because lending financials, obviously, because they are into that business, then they need to have that. But beyond that, if those set of companies which are having literally negligible or almost low leverage, we would be more comfortable investing into those companies. Second is corporate governance. So it is equally important, the kind of track record of the promoter, the kind of management quality, how they treat minority shareholders. So all this is very important while selecting a company. And then eventually it boils down to what is the prevailing valuation, how much we are paying for the potential growth within the company. Is there enough margin of safety that we have for that company to be to form part of our portfolio? So this is broadly how the approach is. So the idea is to make the fund more diversified in terms of at least investing into 50 odd ideas across stocks, across sectors, and at the same time not take too much of risk by making it lopsided or taking undue risk within the portfolio.
Okay. So then the next question falls into the line of sector allocation actually. Is that then which sectors within this small cap space, it's a booming space, it's a quite interesting space, it's got a lot of potential and a lot of chatter around it as well, as you would know, right? So which sectors within the small cap space are expected to drive the fund's growth in the near term? What are your objectives, or what are your expectations? And
Sure. Yeah. So I'll take you back for how the Capex cycle has grown over a period of time, say for last 20-25 years odd. So in 2001, we could clearly see the private Capex was around 35,000 to 40,000 crores. Then it grew to almost around 1 lakh crores, 3.5 lakh crores in 2011. And then for almost next 10 years, the private Capex was stagnant around these levels. And only in the last 2, 3 years, we have seen significant growth in the private capex, and now it is almost hovering around 6.5 lakh crores. So the point here I'm making is whenever we are seeing significant growth in the capex cycle, like what we are seeing now, there are a lot of sectors which get benefited out of it. Now, real estate is a very easy and relatable example here, wherein we have seen over the last 2, 3 years, particularly post-COVID, the real estate has done reasonably well and is expected to continue the momentum. And we think we are in a mid cycle both for real estate as well as for the overall capex cycle. Now, segments like these real estate, capital goods, construction, metals and minings, renewable power, solar, wind, and even to that extent, capital markets, we have seen over the last 10 years, there's been enough talk about and enough thrust on financialization of savings. So segments like wealth management, AMC, market construction companies, depositories. So all these are widely represented by the widely or solely represented by the small cap space. And in that sense, having exposure to a small cap makes a lot of sense. So from that perspective, we'll be particularly be very positive and overweight on these segments like capital market, contract research, manufacturing, capex driven companies, as I mentioned, renewable solar energy component, chemicals, NBFC, banking, auto ancillary, etc.
Actually, my next question is around the capex cycle only. Is that how does the anticipated revival of the capex cycle influence the fund's investment strategy in sectors which are like industrial products or construction materials?
Correct. So as I was alluding to earlier, so because these segments largely get impacted by the prevailing capex cycle, and as and when we see a upcycle in the capex, these segments benefit a lot. So those investors who are looking to benefit out of the capex upcycle growth need to participate in this space because of the kind of representation that we have in the small cap space. You can clearly see the number of companies that are present in these segments, be it capital goods, industrials, real estate, power, metals and minings. All these are largely represented from the small cap segment, and hence participating in for the capex cycle makes a lot of sense through the small cap segment.
Okay. When we talk about small cap, we typically, are looking for value, value proposition. We are looking for something undervalued opportunities that are lying around some, as they say, multi-baggers, in a pure equity sense, right? I think a similar approach is extended across mutual fund as well. So how does the fund ensure that the investments are made in the undervalued opportunities within the small cap universe? And how do you identify all these things?
Sure. So very interesting question. So as I was mentioning, we have seen a significant growth in the market cap, particularly for the mid and small cap space. Now, what has happened is not only your top 250 small cap companies have grown significantly in the market cap. Even if you look beyond, say, 500, 2000 company, there's been significant growth in their market cap because of the kind of growth that we have seen in this segment. So what I'm alluding to is there's enough opportunities for us to look at because we are starting afresh. We are starting with an NFO, and hence in that sense, we don't have any AUM constraint as in terms of whether we should get worried about the liquidity and the market cap of the underlying company because we are starting afresh. So we have almost a universe of 250, which is the small cap companies between 250 to 500, and then remaining 500 companies. So that adds to almost 750 companies as the investment universe for us to invest into under the small cap fund. So that gives us a lot of coverage and comfort to identify promising companies based on the criteria, as I mentioned earlier. So that gives us a lot of confidence without getting worried about liquidity, unlike what we've seen with peers, larger peers in this space. So that is the primary reason why we don't have to bother about liquidity, and at the same time identify those stocks which are undervalued within this space. So within 750 companies, we can identify those undervalued companies across market cap buckets between this 250 to 1000th company. So that leads us to a very comfortable situation wherein we can identify those undervalued stocks from a long-term wealth creation perspective.
Okay. Again, as we all, I mean, we generally know that, small cap investments are inherently volatile. I mean, we discussed the risk factors, how the risk management your fund employs, filtering them out through robust corporate governance, liquidity, and all. But the volatility is still there. I mean, we see compared to large caps, small caps see see frequent up and down. I mean, they may not be the highest of highs and the lowest of the lows in a that spike of a turn, but there is some inherent volatility. Other than the things that you mentioned here, what are the other factors or what are the other measures that the fund employs to manage this volatility?
Sure, sure. So fair point. So we are also of the same view that managing risk is equally important while return maximization or alpha creation is the goal. But at the same time, giving a palatable investment experience is all the more very important. And from that perspective, portfolio diversification makes a lot of sense. As I mentioned earlier, we'll be investing into 50 odd ideas to start with across different sectors. Now we are very benchmark aware in that sense. So since the benchmark of this fund would be Nifty Small Cap 250 Index, now what happens is at a company as well as at a sector level, we have defined certain limits on the upper side that we won't go beyond. So at a company level, our active weight, which is how much the benchmark weight is there in that particular company and how much we'll be investing into, the difference cannot be beyond 2.5%. So active weight will always be capped at 2.5%. So just to give an example, in case if a company has a weight of around 5% in the benchmark, our overall allocation to that particular company at max can go up to 7.5. In case if the company is not part of the benchmark, then at the most we can have around 2.5% in that company. So that is on the company active weight. At the same time, we also have sector limits in terms of deviation that we can take vis-a-vis the underlying benchmark. That again is we have defined limits there as well. And obviously, larger sector weights will have larger deviations, and relatively smaller sectors will have smaller deviations. So all this will allow us to generate a very prudent risk management portfolio, which can give a very risk-adjusted performance on a medium to long duration on a durable basis.
Okay. I would like to know that what would be the churn of the fund? I mean, how the fund would be churned, how many times the fund would be churned, and what would be the composition of stocks? I mean, total, like, what would be the total composition of stocks? 50 to 70, 50 to 60? How would that be?
Yeah. Yeah, so basically, we as a fund house are quite conservative in terms of investing. So ideally, most of our investment ideas we invest from a very long-term perspective, say for 3 to 5 years. So from that perspective, even this fund would be largely a buy and hold strategy. So you can expect a low churn within the portfolio. Unless and until we see that whatever the investment thesis was at the time of investing, that doesn't play out, or there's something which has changed significantly, and hence we have to again take corrective actions, or if the share price has run significantly in a very short span of time, and which leads us to investing into a different new idea which can potentially give us better returns thereafter. So those would be the kind of situations when we would be reallocating investments. Otherwise, it would be largely a buy and hold, low churn kind of portfolio. In terms of market cap allocation, as the regulatory limit defines, minimum 65% at all points in time has to be in small cap. Remaining 35% can be into large, mid, and even within micro caps, which is beyond 500 to 1,000 company.
Correct.
So depending on how the economic growth for India is, how the global scenario is, whether there's too much of risk on the global side which is emanating, what are the earnings potential within each of these market cap segments, how the valuations are prevailing. So, and all these kind of factors would likely define how much allocation we need to have in the remaining large, mid, and micro cap companies. So fairly diversified across market caps, across sectors, across companies, 50 odd ideas with a very prudent risk management philosophy.
Okay. Then my last question comes into the picture is that with the increasing foreign institutional investors participation in the country, and especially in the mid and small cap, how does the fund position itself to leverage this trend?
Yeah, so that has been a recent trend that we have seen that FIs have been pulling out money from large caps and investing into mid and small cap. So all the more, it's a very supportive factor in that sense that all the more a reason to participate in this space. That not only your DIs are investing into this segment, but even FIs are quite positive in this segment.
Correct.
Also, one more reason why the change in portfolio allocation for FPAs has been because a lot of new companies have come within this segment, as I was mentioning earlier. So there are newer segments which are coming and with a very promising, robust business model. And hence, not only domestic investors, even foreign investors intend to participate within that space. So overall, again, the pie increases significantly, diversification, you have newer segments coming in. So this is only, again, a very positive factor for investors to look at from a small cap investing perspective.
Okay. Thank you so much, Shrenik, to give us such a great insight onto this new fund. We hope that it gets the response that it deserves. It opens to a huge market response. We wish you all the very best, and thank you so much for your time.
Thank you. Thank you so much. Thank you.
You.